How do qualified childcare expenses affect the tax credit? Imagine trying to balance work and family life and wondering if your childcare costs can help lower your taxes. Well, they can, but how exactly does that work? Let's break it down. When you pay for childcare for children under age 13 or dependents who cannot care for themselves and live with you, those expenses can qualify for the child and dependent care tax credit. This credit helps families offset the costs of childcare that let you work, look for work, or go to school. Qualified expenses include payments to licensed daycare centers, family child care providers, babysitters, or other care providers. But the care must be necessary for you and your spouse if you are married to work or search for work. If you are single, the care must be for your qualifying child or dependent. Now, how much of these expenses can you claim? You can claim up to $3,000 for one child or dependent, or up to $6,000 if you have two or more. The amount of the credit depends on your income. If your income is lower, you get a higher percentage of your expenses as a credit. This percentage ranges from 20% to 35%. For example, if your income is lower and you paid $3,000 for childcare, you might get 35% of that as a credit, which is $1,050. If your income is higher, you might only get 20%, which is $600. The credit reduces the amount of taxes you owe, but it cannot give you a refund beyond your tax bill. So, if you owe less in taxes than the credit amount, you only get the reduction up to what you owe. For Latino families, this can be a big help because many pay significant child care costs to work or study. But remember, because the credit is non-refundable, families with little or no tax liability might not see the full benefit. Also, keep good records and receipts of your payments. You need to report the tax identification number of your care provider when claiming the credit. To claim the child and dependent care tax credit, you fill out IRS Form 2441 with your tax return. Both parents must have earned income unless one is a full-time student or disabled. Payments to relatives under age 19 or to a spouse do not qualify. Some states also offer their own child care credits or assistance programs, which might give you additional help or refundable benefits. In the end, qualified child care expenses can lower your tax bill by giving you a credit based on what you spend on care. It's especially helpful for families working to juggle employment and child care needs. Just remember to keep records, understand the limits, and file the right forms to get the most out of this benefit.